Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim Paola and Johnny C. live on Real Radio.
That's right. Saturday morning, that means it is time for Florida Talk Real Estate. Thanks for carving out 2 hours for our infotainment every Saturday. Whether you're tuning in on 92.1 or 101.7, we thank you very much. Of course, there's a couple other ways you can join the show. If you're on Facebook, look for Florida Talk Real Estate on Facebook. We go live stream, and good morning to everybody out the gates. Of course, on YouTube as well, Florida Talk Real Estate. You'll find a wonderful YouTube page, and that is loaded with all kinds of information, lots of videos that we had, and we live stream for 2 hours every Saturday morning. Remember, Florida Talk Real Estate is .com. We call it your one-stop real estate shop. That's your access to the entire team, and you have an entry point for 2 hours every Saturday, toll free at 877-927-6969. Should you have questions, comments, concerns in the world of real estate, don't hesitate at all. Jimothy will line you up and we'll get you on the air. And we typically have the team assembled to handle your questions and more. If not, we'll always get that answer for you from the rest of the team. Of course, I'm your boy, Johnny C., your air traffic control. Let's say good morning to Mike Rauch, the mortgage guy from the mortgage firm. Good morning, Michael. How are you, my friend?
I am doing wonderful this morning, Johnny. Thank you very much. It's a bright, sunny morning this morning. So we've had, our typical rain here. Starting since pretty much June. It's like right on time, right? Yeah. Big thunderstorms every day, but like today's nice so far.
So far, yeah, considerably different weather than what we had last Saturday, but yes, it is summertime in South Florida, so that means definitely be prepared for rain on the daily. For those that are new to Florida, you will learn quickly that we are in the wet season at this point. Nice to see you, Mike. Thanks for being with us every Saturday. You can join us. Of course, we always lean on my guy, Jimmy D. You can call him Jimmy D if you'd like. Of course, that's short for Jim Paola. I've told you for many years he runs the top producing Keller Williams team. If you don't know, that's the Florida Home Pros. And I guess now you know. Good morning, Jimmy D. How you be?
Hey, good morning, guys. I'm happy South Florida today. I just have a technical question. Jimothy, how is all three mics sounding to you right now?
Johnny's a little echoey, but other than that, it sounds like he's in a room with no carpet.
Yeah.
Other than that, that's okay.
Okay, because everything sounded very screwed up on my end. There's a very, very big delay. So if you hear me not saying something right after, or if I step on you, I apologize. Okay. So happy South Florida, everybody. We got a really good show today. We got a lot of stuff to talk about as always. Boy, real estate is just super real news lately. Don't you guys think? There's so much stuff going on between we didn't talk about this last week, but the property appraiser is saying that they think if they don't reduce the tax rates and give a tax rate, they're looking at like a 13% increase in taxes for appraised values. We have the insurance companies just fleeing. We had another company about ready to crumble, another insurance company, home insurance company. So now we've got that issue. The interest rates went up again this week. We've been flat for 3 weeks in a row. This week it spiked up a little bit. This is right before the Fed Reserve comes to determine if they're going to do another Fed hike this 14th or 15th of next week. And I don't see any reason why they're not going to do that. I would be stunned if they don't do at least, do the half point that they've been talking about. And so there's all of that stuff going on right now. It's just a very crazy market. We're also seeing little signs that the market is shifting. We're seeing more reduced prices than I've seen in I don't know how long, and more back on markets. So we're going to talk a little bit about that also. Man, the news, guys, it's just been so much with real estate. What have you been catching on the news so far that's piqued your interest with the real estate stuff right now?
I don't really pay attention.
I
don't have to pay attention, Jim, because everywhere I go, everyone wants to talk about mortgage rates and real estate in the market. And is it a good time to sell, good time to buy? And I kind of do have that similar conversation a lot. But yeah, rates kind of spiked up again. So this is now, I think I said last week, like it's been nice. I haven't had to check pre-approved borrowers, every time they're looking at a home to see like, hey, what's the rate going to be today, right? What are rates looking like today? And now I kind of had to fall back into that habit this week because they went up. It wasn't like a huge spike, but they're up and it moves and it makes a difference.
Yeah. Just
but-
to tell everybody what the rate was, it went from 5.09 to 5.23. So that's what it did this week. Now, the 3 weeks before that, for 3 full weeks, we were hovering right around 5.09. So that's where we got the spike. Now, I think that part of that spike is related to the inflation news that we got, which wasn't good. And also it was related to, I think, getting set up for the Fed this week. Usually the mortgage rates, it just seems like in 2018 in this run of increased Fed Reserve rates, they start building in the shock.
Yeah.
And I put that in quotes because it isn't really shocking because they already told you months and months ago what they were going to do. But the shock of it actually happening. Oh my God, they raised it another half point, for the Fed Reserve rate, not the interest rates.
And the traditional, line on that is like the Fed interest rate doesn't directly affect mortgage interest rates. Not like they go up half a point, which they're going to do 50 basis points in this summer, right? Like that's what's coming. That's the next move, I think. Our rate shouldn't be bumping up a half a point, right? Just because of that move. But this year, whoever sets, I don't even know if it's who sets it. It's an investment thing, right? Where it's almost like a commodity with these mortgage-backed securities. But obviously there's some profit margins that are expected, and rates are adjusted to maintain those profit margins, right? So whoever nobody's like, hey, Fed's raising the rates, we're gonna lower our profit margins in the lending world, right? That is all passed on to the consumer, right? So if it's one point in profit, that 1 point stays the same. So yeah, I think long term, obviously they're preparing for it, and they're almost acting like these short-term lending rates are impacting the mortgage-backed securities rates, and we've seen it this whole year.
I actually was talking to the and I'm going to have him come on the show very soon, but I was talking to our team leader here at our office. So a team leader isn't like me. I'm also a team leader, but I run my team. But the team leader for the office runs all the Keller Williams agents in that office, right? I don't know how many we have here, but I don't even know how. It's probably 150 to 300, somewhere around there. And
so he's like a team leader.
Yeah, he's like the team leader, right? Keller Williams has a lot of bureaucracy. It reminds me of the Sun Sentinel. The Sun Sentinel had one editor for every 3 people. And I'm like, really? Do you really do that? And they were constantly in meetings all the time. And I was like, you have so many meetings, you don't even know what's going on in the news. You don't even know what's going on the outside. And you're a newspaper.
It sounds like
this meeting's planned for our next meeting.
Right.
Exactly.
All right, guys. We're going to take the last 10 minutes and plan for next meeting tomorrow. It sounds like the like Dwight in The Office, right? The assistant to the original manager.
Yeah, I know, it's funny. So I'm sorry. Why did I get off on that? I forgot what I was saying.
You were talking about you were speaking with your team leader.
Oh yeah, and my team leader. I'm sorry, we got off on the whole team lead thing. The team leader, we were talking about interest rates, and I was telling him that it was very clear to me, this was so transparent, that we'd be right where we are right now. I think we're a little farther ahead not a little farther ahead, but I thought we'll probably end around 6 by the end of the year, right? That's what I was thinking. He thinks that interest rates, I'm not saying this year, but he thinks that they're going to get to 8 and 9. He thinks we're just going to go up, and it's going to go pretty fast. And he thinks we're going to get to 8 to 9%. And, he talks to all the big national bigwigs that are involved that have the big overview of what's happening across the country. He has those weekly meetings about that. So that's what some of the people behind the scenes in the major real estate companies are talking about, that interest rates could get that high. I'm not sure I buy into that, but we did go through that. We did go through that in the 70s.
I was going to say that. I guess that's one way to kind of stop inflation and maybe force a housing crisis, right? To have interest rates at 8, 9%.
Just keep people from spending money at all, and just inflation goes away.
And exactly, that's what you do. You just crush everybody. Just say it's going to be too darn expensive to buy anything, so you just stop buying everything. The economy slows down, and then you start crawling back out of the hole again. That's kind of what that was the way that they killed stagflation back under Reagan. Okay, during Carter Reagan, we had stagflation. Inflation got that's inflation with low growth, not terrible unemployment. It's just everything's just blah. You can't grow. You're not growing. Nobody wants to hire anybody. People are working, but they're not doing anything fun. They're just like making ends meet because everything's so expensive. And you just get in that doldrum. Japan went through that, and they called it, I think, the lost decade. Japan went through that, and it was like a whole decade of that, and no growth and everything. So I'm not saying we're there, and there are signs of reasons why that shouldn't happen. And the one thing that what I keep focusing on now, yes, I'm watching the interest rates. Yes, I'm watching what the Fed Reserve is doing. Yes, I'm watching what's happening with inflation. But what I'm really watching is employment. Once those unemployment figures start going up, that's when we're going to find out how bad or how resilient this economy is, because that's when that's when the rubber hits the road. Am I going to be able to pay my bills all the time? And then that's when we're going to see what's going to happen right now. So right now we don't have any of that going on. There are some transitioning going. We mentioned last week, like people in the mortgage industry, right? People in the mortgage industry, there's been a lot of layoffs in the mortgage industry. And Mike was mentioning it isn't just the officers, but the processors behind the scenes, everybody that has to service all of those things, because we just have less work, right? And we were saying that isn't like doom and gloom necessarily. It's just a function of the market. When things were good, they were adding on tons and tons of people, right? To take all the extra stuff. When the interest rates were super low, they were hiring like crazy. Nobody was going, that they just take that as natural. But when the layoffs start happening, they were like, ooh, this is really bad. Well, really, it's just a function of how many deals you can do every month and how much you need to pay for that.
Right.
So now
I don't think many lenders were out there saying, "Hey guys, we need to turn down the production because we don't have the personnel." Right. Hey, let's find the personnel to handle the production. Which and I think I said that last week that was like, so it was built up to handle the elevated production, and now they're kind of going back down to where they were. So I don't know.
So they have to. That's what I mean by function of the market, right?
Exactly.
It's really, and remember this. We just had the report come out for the market report come out for May, and we were 20 for single family homes in Palm Beach County, and throughout the rest of the 6 counties that we cover, we were about 25% down in sales. So that doesn't include refis, but just like that affects realtors. That means there were 25% less closings than there were the year before, right? At the same time last year. So that means less commissions and less title closings and less insurance policies. That might be a good thing. and that kind of stuff. So this is how it goes. And the other thing, the reason why to keep an eye on this is that more real estate accounts for a huge part of the economy. People don't realize this. I forget sometimes myself. I read this really good article. I think it was in Business Insider or Fortune magazine, where they talked about the spillover effects for the economy when somebody buys a house and moves, right? So they talk about the moving companies or the trucks that you're renting and the cost for that. And then you got to go out and buy the boxes and the tape and the packing materials, right? And then you got the fuel costs. And then you've got maybe hotel stays in between it if you don't hire us, right? You might have those kind of things. Then you've got, then you're buying stuff to fix up the whole house you're moving into, and then you have the title company.
I'm thinking about the equity position. So when housing prices are very high and people there's like a refi surge, that money is basically, it's almost like what do they call it when they were injecting money into the economy with the
quantitative easing.
yeah, I mean, it's it's kind of something like that, right? Like this equity that's sitting there that is doing nothing, people are tapping into it and spending it, right?
Mhm.
And so it's like they're injecting this cash into the economy that was just kind of sitting dormant, and that's gotta have a boost on it, right? The spending, right?
Absolutely. So it's like, so if the real estate market starts slowing down too much, it isn't just the real estate market that gets affected. It's like it spills out through all these other related industries.
Yep.
And so real estate is always a big juggernaut. Now in Florida, it's hyper juggernaut, right? Because in Florida, I think real estate is it's in the top four. Okay. It's agriculture, tourism, and real estate, basically. I think those are the top three. And not in that order. I don't mean agriculture first. I think it's tourism, real estate, agriculture, if I'm not mistaken. People forget that we're one of the biggest farm states in the country. You know,
Sure.
we
We
used
got
to
lots
be
of
we used to be number 2 for cattle or something at one point. I remember when we started the show, I read a stat. I think we had more cows than Texas or something like that, or close to it. And who would have known? Texas,
like, wait, how far back is that? I mean, I think back
2012.
in 2012 we had more cows than Texas.
We're very close. We were like number 2 for cattle, for
Wow.
like for cattle industry.
I was thinking back in like the 1800s or something.
I know, right?
Which is probably true. There used to be a big cattle industry here.
Absolutely. So anyway, the market's
is.
really, it's very interesting. And Mike, I read an article. I'm sorry, everything was screwed up technologically today, so I wasn't able to get everything done I wanted. But I wanted to call you because there were some tips about how to try to save money when you're trying to get a mortgage in today's market. So I don't want to, there's 5 of them. I thought a couple of them are pretty good. One of them was talking about discount points. So I'm going to talk to you about that.
Okay.
Because I thought that's something that people should understand better. Do you mind if we just talk to you about that blind today on the show without just throwing it out there?
Yeah, it'll be a test for me. Like,
yeah, there you go.
How much do I know?
Yeah, so we'll talk a
What's a
little
discount point
bit.
anyway? Can you define that for me?
I'm sorry, I'm behind. What did you just say, Mike?
I said, what's a discount point anyway? Can you define that for me?
Johnny?
Yeah, we'll talk about it as long as you can tell me what the hell it is.
You want me to set up what it is? Or are you going to?
No, we're going to talk about that in just a little bit. Okay.
Yeah, no
We're
problem.
just going to talk about that in a little bit. And I did want to talk about trying to hire an agent, and negotiating. Okay. There's been a lot, because we want to get through until the 9:30. We will take the hard 9:30 break. Okay. And then when we come back, we're going to give tips on how to save money on mortgages. We're going to talk about that. Okay. But I wanted to talk a little bit about negotiation, because right now negotiation is so crucial in trying to get deals done. Mike, we had another one of our properties. I'm not going to go over it to the air, but we had another one of our properties late last night not appraised. Right. So now I got to go into that negotiation again. So actually it isn't. You may be the buyer. You may be the mortgage person for this. You may not. I'm not sure, because they bought new construction. So I'm not sure. Okay. So they might have went to them. But
new construction's not appraising at this point?
No, it's the house they're selling. And Johnny, it's the one that's in your neighborhood, and it didn't appraise. Right. So that's happening a lot right now. That's why we're seeing a lot more active back on markets, right? When you see active back on market, or I'm sorry, if you see back on market, okay, probably the house either didn't inspect or didn't appraise, right? That's pretty much the 2 reasons why it goes back on market, or the buyer's financing fell apart, maybe not related to the appraisal or inspection issue. Those would be the probably 3 things, right?
Jim, I was thinking, so you're watching back on market, you're watching reduced price. What about how many of them, they don't go back on market, they don't have a reduced price officially, but there's a price reduction due to a low appraisal, but the deal still goes through, and you never see the results of that. Like, that doesn't show up on the MLS.
Well, do you mean you could kind of you could sometimes figure that out if, let's say, I'm making up numbers, house is on the market for 600 and then it closes for 535.
Yeah, you could see that. I'm just saying, like the status of price reduced or back on market. You don't see those indicators on that situation.
Yeah.
Because it just closes. And so yeah, if you were investigating it after the fact, you could look at what it listed at and what it closed at. But
Yeah, so this neighborhood where I was concerned about the appraisal, so I went out and I called 10 agents in that area that either closed in May or had pending deals that weren't closed yet, and I called 10 of them, and 5 of them called me back, and I had a deep conversation with all 5, and out of the 5, 4 did not appraise. 4 of them did not appraise in this neighborhood. Now, it's a very popular neighborhood. People want to buy there.
I think I know why.
The reason, and this is what's happening in neighborhoods right now, is what's happening in neighborhoods is that the sellers still think we're in this crazy frothy market, and some of the places, some of the neighborhoods, it's still like that, but it is street by street, not even neighborhood by neighborhood. It really makes a difference, right? And the other thing is that because people have been so aggressive on their prices and buyers have had such a lack of inventory, that the buyers are willing to give sellers what they want but if it's financed, when the appraisal comes, if the appraiser can't justify the numbers that are happening in the neighborhood at that moment, they can't agree with that. They can't agree with that sales price, that contracted sales price, if they can't justify, because their federal license is on the line. And we talked about that with AJ Holman just a couple of weeks ago about that. He was saying that it was much harder if they didn't see a closed sale that was close to the price you're at and you couldn't justify it based on the closed sales right now. They don't care if you have 19 offers in 3 days. They just don't care, because what they care about is what's closing right now, because we're so frothy. A lot of the appraisers are afraid, and I've talked to 3 or 4 of them that have said this to me. They're actually afraid that if anything gets crazy in the market, too crazy, that when they start going back to figure out if people have been getting too high of appraisals, that they could lose their license. Because that's what happened back in the day with all that fraud back in the day. The appraisers were in cahoots with the mortgage company, which was in cahoots with the realtor to get the highest price possible no matter what. That's not an appraiser's job. An appraiser's job is to determine what's the fair market value and what's the risk to the lender as to doling out this loan.
Right.
And people lose sight of that. It isn't about trying to get the most money. That isn't what the appraiser's about. But we're having problems with that right now.
I was going to say, can you imagine, Jim, if the appraiser's job was simply to like take an average of the offers you received and use that as the the market value of the home, right? Like, no,
Yeah.
hello, they're not looking at the offers you received. They're looking at closed sales that are, as close in proximity to your home and have the same, square footage, bedrooms, bathrooms, features, and they start making adjustments. But yes, they're not looking at your offers to to evaluate the market value of your homes.
Yeah, we had an appraisal deal that we closed. Congratulations to Ken and Avanya. They closed on their house yesterday, and I'm very happy for them. Now, we haven't found them a new house because we were in contract and the deal fell apart. But no worries, they're not homeless, because we worked a post-closing occupancy agreement, allowing them to stay in the house for a period of time while they're looking for their new home. So we know we'll get them a new home. But what happened in that house, fake numbers here, but same ratios, so the percentages are right. We put the house on the market for 400. We took like 455, and then the house appraised at 355. Yeah, and now we're 33%, 33% apart on this number. And we went ahead and disputed the appraisal, and I got the 355 up to like almost 400, right? In this case, right? And and then we got the buyer to pay above appraised value. So we didn't get what we were anywhere close to the 455 number, but we got close to what our original list price was. And then 2 days later, after we agreed to all this, I had an appraiser call me up that was doing a refi right across the street, same unit, same neighborhood. And he asked me what we were under contract for and did our house appraise. This is an appraiser calling me to do research in the neighborhood. And I told him that what our house appraised for, and then how we disputed it and got the higher price. And his number came in. So in my case, I said 355 and I got it up to 400. So in this case, his house, same exact house, he said that he was turning in an appraisal for the refi at 455, the number that we wanted.
Oh.
Right? But there's nothing we could do about that, Mike, right? We couldn't use the refi appraisal to try to fight with our person.
I mean, I suppose if you got a copy of it, you could go back for a second reconsideration with your appraisal. But yeah, a refi appraisal is not a comp, right? It's not something that has closed. So no, I would say you never even see a refi appraisal. Even if somebody had refied last week and had an appraisal, you wouldn't see that as a market appraiser, right? You wouldn't be able to see that. You have to look at closed sales for comparable sales. So, but yeah, I mean, that does show that there is still, Johnny, it's subjective for appraisers as far as what they are adjusting, the adjustments that they make to the comparable sale. Like if the comparable sale closed at 400, but there was no pool and you got a pool, the appraiser makes an adjustment for that. What's the dollar amount of the adjustment? Is it $18,000? Is it 24,000? There's some sort of number. The biggest one, Jim, that we've seen variation on is what they're adjusting for square footage of the home. So differences in square footage of the home, right? So some appraisers will say, hey, look at this home in this neighborhood, in this market, the square footage value based on these comparable sales is $115 a square foot, right? So if you had 1 square foot difference, that's $115 adjustment. Well, obviously the differences are bigger than that. But Jim, we've also seen appraisers value something at $35 a square foot, which
yes,
it's kind of strange, but I think they have latitude, right? And what formula they're using to come up with that. But that could be a pretty big difference as far as an adjustment, one home sale price compared to your home. So
yes, it's that's why I always say that appraisals are not just a science, it's really an art. It's an art, not just science, right? So it would be so easy if it would just be a mathematical formula and then that's it, right? But it isn't fair to people that have improved their home over time, other people in the neighborhood, and you have to start taking that into consideration, and that's why the appraisals come in. But what people have to understand is sometimes I talk to sellers and they go, my house is worth, you've heard that saying, my house is worth what somebody's willing to pay for it, right?
Which is true in a sense, yeah.
Except for one caveat when it comes to houses. It's what the person the person coughing up the money is willing to pay for it. So yes. If you're buying cash, then it is worth what the person's willing to pay for it and you're willing to take. But if you're doing with financing, it isn't what the buyer's willing to pay. It's what the lender's willing to lend on the property. Right. And they're the ones really cutting the check. So that's the number, not what the buyer wants. It's really what the lender says.
In fairness to the lender's position, they're not making that assessment on their own, right? So they're basically saying, hey, we don't really know. We're going to task the third-party independent professional,
right,
to give us a value of that home, right? Who have their own independent organizations and rules and regulations and how they do these things. And which obviously was a problem back in the day, Jim, when you said the lenders were in cahoots with the appraisers. I don't know if that was a financial thing, but I can imagine a scenario. It's like, hey, I know I got my guy. He gives the best values in town. Let's make sure he gets this appraisal, right? Because I know we're going to be on the higher end based on his formula. So you could see that scenario. That's much more difficult to do these days, right? You have a panel of appraisers, and it's like just kind of rotating through. But I was going to say now I forgot what.
Yeah, the lender. You were saying it isn't like the lender wants a low appraisal. The lender will make more money if it appraises.
They want a third party. And guess what, guys? Here's the reason. The home is the collateral for the loan, right? It's the security for the loan. So worst case scenario, the lender has to try to repossess, right? Or foreclose on that home and get as much value as they can. And of course, we all are old enough to remember when that became very difficult for lenders, right? To they lost tons of money. Of course, the government, whatever, stepped in. Yeah. We don't want to go through that. Yeah, so there's all the good news, Jim. What's the bad news for this first segment?
Yeah, exactly, right? Well, we are going to have a little good news. What we're going to do is we're going to get really great advice from Mike, talking about how, tips on how to save money when you're trying to get a mortgage in today's market. The prices are increasing, but there are ways that you can save in these increasing interest rates. So let's get a couple of tips from Mike on the flip side. It'll save you some money if you're thinking about buying or refining, and we could do that. Hey, how about that, Johnny?
Yeah, it sounds fantastic. And we'll do a quick break here. It's 4 minutes long. You're going to get a bunch of valuable information about the team and how to reach the team. I'll share it with you as well. Remember, Florida Talk Real Estate, not only Facebook page, YouTube page, but that is a .com. It's your one-stop real estate shop, has been for many years now. Your access to a team of pros. It all begins at floridatalkrealestate.com, where you'll find the hotline. It's answered 24 hours a day, 7 days a week at 888-973-7828. That's 888-973-7828. Again, find it at floridatalkrealestate.com is your ball rolling moment. Whether you're looking to maybe refi or you are thinking, you know what, I am buying a home right now and I'm looking to buy a home, sell a home. Maybe you're stuck with a home, you're not quite sure what to do with it. Reach out to people that are great at what they do at floridatalkrealestate.com. Of course, as I say, we're back 4 minutes from now. If you have a question, comment, concern, you want to be a part of the show, you can line up right now. Jimothy will get you there on hold at 877-927-6969. 4 minute break, and we're back at it with possibly your phone call. Thanks for being with us every Saturday, making our way through 2 hours of infotainment. If you're doing the math, we got a lot of show left for you. Thanks again for being with us every Saturday right here on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hi there, I'm CBS 12 meteorologist Jennifer Collins. After a sunny start to the day, cloud cover will increase through the lunchtime hour, with high temperatures returning to the middle 80s, feeling like the high 90s. Showers and thunderstorms will return later this afternoon and evening. Rainfall, the biggest threat in today's storms, with localized flooding, lightning, and gusty winds possible.
This report is sponsored by Wendy's Breakfast Baconator. Don't let breakfast be boring when it could be better. Wendy's Breakfast Baconator will have you feeling sunny side up all day long. Wake up to fresh cracked eggs, savory sausage, and oven-baked bacon, of course. Order it and start looking forward to tomorrow morning at participating U.S. Wendy's during breakfast hours only.
Hey, it's boy Johnny C here. Host of Florida Talk Real Estate. They're tops when it comes to helping buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia. They have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 209233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title, that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need the same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Jungle Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. All these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because FloridaTalkRealEstate.com has you covered. That's FloridaTalkRealEstate.com.
You're listening to Real Radio 92.1. We are an iHeart radio
I
station.
don't have to, but I'm trying to work with them, but I'm looking for a place to go.
This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. It's toll free, 877-927-6969. If you dial that up, our producer extraordinaire, Jimothy, he'll put you there in the queue and we'll get you on the air with your questions, comments, concerns in the world of real estate. Do not hesitate. The water is beautiful on a Saturday morning. Great to have you with us every Saturday. Thanks for tuning in on 92.1, 101.7. That's the old terrestrial radio. Of course, if you have your free download, the iHeart Radio app, that makes us worldwide. Great to have you with us. And we live stream as well every Saturday for 2 hours of infotainment, not only on Facebook at Florida Talk Real Estate, but on their YouTube page as well. That's Florida Talk Real Estate LLC on YouTube. Streaming live, and you'll find a ton of informational videos for you there. Florida Talk Real Estate on YouTube. Florida Talk Real Estate also with .com. Remember it, use it, love it, share it. You can change lives with the one-stop real estate shop. That is FloridaTalkRealEstate.com. Johnny C, well, that's me. I'm your old buddy, your pal. Nice to have you along with us on a Saturday. Mike Rouse here as well, the mortgage guy from the mortgage firm. Good morning, Michael.
Yep, still here. Thank you.
Excellent. Thank you for sticking around. And thanks to Jimmy D for showing up like clockwork for so many years now. That's Jim DePola. And I've told you forever, since day one, that he runs a top producing Keller Williams team. Well, maybe not since day one, because I don't know if it was top producing out the gates, but it didn't take long before that was thrown into the intro. That's Florida Home Pros. If you don't know, now you know. That's the team with Keller Williams Innovations. Innovations? Am I? No? Yeah, innovations.
Innovations,
right?
Yes, innovations.
Well, career partners, and we had it's innovations, right?
Yes.
Yeah. All right. Thank you.
Makes me think Jim's old intro. Jim DePola wants to be a top producer with Keller Williams Realty, right?
Slacking to be a top producer, run a top producing team with Keller Williams. Gotcha.
Yeah, I was pretty happy. We're starting to get a little recognition over here, our team over here at the new office at Keller Williams Innovations. We moved from the West Palm Beach office to the Boynton office, even though it's much farther commute for me. And I really liked the old location better because it was a little more convenient. Just a little tiny bit more convenient for all of our customers from our wide swath to get to the office. But the office I moved to, it's a very vibrant office with really good coaching. And everybody here is really focused on growth. So I'm really excited to be here. And I was kind of excited to see that in April for the first time, because we got here basically January. And in April, we were actually ranked in the top 10 producers in this office, and that was really nice. And then May, we just found out that we were also ranked again in the top 10 producers at the same time. So that was really, so that was really awesome to start seeing a little bit. And that, is a testament to the team that we've built. And thank you so much to the fans that listen to the show, because you guys are a big part of our business. We are so grateful that the Real Radio fans have, so many of them have decided just to pick up that phone, that 888-973-7828, and say, hey, I've been listening to these radio guys for a while. I got a real estate question. Maybe you can help me out. And sometimes we end up doing business together, which is a really happy experience. And usually they have great results. Either they're trying to get a mortgage or a refi or buy a house or sell a house or buy investment property, even commercial deals. We're working on several commercial deals right now, with the Florida Home Pros. So we're there for you for all that. And other times it isn't doing a deal, but getting the information you need so that your family can make the right decisions for them. That's what we're about. That's what this team that we put together for the Florida Home Pros, but also the team for the Florida Talk Real Estate Radio Show team, right? That team is the one-stop real estate shop. You can get all your needs there. We can get legal questions answered, title questions answered, probate issues answered, even student loan stuff, right? What realtors talk to you about student loan all the time, the way that our team does, and at the level we do. Got to tell you, if you're still hurting on student loan debt and you're thinking that COVID plan that they had is the way to go to avoid making the payments during that COVID, the COVID student loan relief thing.
Yeah.
The program that we've been offering you now on this air for 5 years, it's a real federal program. It's federal. It isn't some kind of crazy program. Is out there for you, and you can change your student loan payment on your ability to pay based on your income, and people don't get that. And Johnny, how many people have we seen over the years go from $300, $400, $500 a month payments to a fraction of that, and many of them zero, where they're paying nothing, and getting credit for paying nothing? Not like you're in trouble or the debt's adding up or anything. You're actually getting credit on the total debt relief of your loan during the time you're not paying in that program. So
it's been amazing to be able to put so many people in that direction to at least get armed with the information, right? Because some people decide it's not for them, and I'm always baffled when they do, because I'm really interested in what the details are that kept them from deciding to do that, because it's time and time again really, really effective in kind of changing the course of people's financial future.
I just did a pre-approval for someone, husband and wife. The wife has been with Broward County Schools since they moved here, 7 years. She's got a big 6-figure student loan. She's got a 0 payment deferred, but she's not in the program.
Wow.
And she could have been 7 years into a 10-year program
payoff
with a what do they call it? Forgiveness of the outstanding debt. And so I think back and so you could one side of that is oh geez, 7 years, I got to start a new 10 years. Holy cow, that's going to take forever. Well, guess what? Time flies. Get in the program. Get do it in an optimum way so that your payment is reasonable for you, or even zero, right? Maybe zero, maybe a little bit something. Got to get in there and knock those years out, and it will happen before you know it. Holy cow, where were we 10 years ago, guys? 2012.
We were just starting the show. We were just starting the show 10 years ago. And then here's the other thing about that is what's surprising about the ability to pay calculator that the federal government uses. It's really seems to be very reasonable. Like, they're not expecting you to pay an arm and a leg. It's like, well, you're going to do it on your ability to pay, and we expect you to pay this. The amount that they're expecting you to pay based on your income is very reasonable, it seems to me.
It's and it's also, I think they have various ways of calculating. I look at that with envy sometimes. I'm like, because we're pretty strict about how we have to calculate your income, right? So depending on what you do for work, we're like, here's what we do for this income, here's what we do for this income. I think they give you some various ways of determining what your income is for that income-based repayment calculation, whether that's, a tax return or a W-2, or, I don't know what the various ones are, but it seems like it's reasonable. And if you do things in a specific way with a specific purpose, you can kind of get into a payment that is comfortable, affordable, and the biggest thing is the loan forgiveness at the end of it. That's the program, Jim, is, get into it, income-based repayment with the forgiveness at the end. And if you're not in that,
yeah,
you're hoping that you get some sort of forgiveness based on, the lawmakers.
Mm-hmm. Absolutely. So, and the other thing is, why do we talk about student loan debt and ways to save money on that? The way we got into that was because we were trying to help people get better mortgage deals, because the student loan debt is included as part of the debt to income ratio. And then on top of it, with student loans specifically, if you didn't handle it the right way, then mortgage lenders are supposed to handle it for you. So they tell you what your payment should be, even if you're not making the payment, if it's deferred.
And it's not even a real in-depth analysis. I mean, the student loans, I'll tell you, there was a progression. It used to be, if it was deferred, it was deferred outside a certain amount of time, 12 months, we didn't have to count it. Then they said, you know what, that's asking for trouble, because these people will have a student loan obligation at some point in the future. So now we're going to do it, and it's 1% of the outstanding balance. So Jim, you can imagine if you had, and I see this a lot, people are surprised, if you have a six-figure, let's just call it
$100,000, right?
1%, that's $1,000 payment that I would have to hit you for, right?
Yeah.
And that's 2 car payments for most people, right? Like, that's just a big debt number on the DTI, the debt to income calculation. We got some reprieve from that recently, where it's now 0.5%, but still $500 payment that you're not making, right? But at some point, it's like, hey, you're going to have to start to do something with this, and we're going to count it. We're going to count it in your budget analysis, essentially.
So here's the thing. Here's just a couple tips to wrap up on that. Is that it's always smart to talk to your lender for the student loan to see what they can offer you. But here's the thing. A lot of times the lenders are doing bait and switch, and they'll offer you the same amount of monthly payment that the federal government will do, but they're not giving you all the benefits that the federal government offers you, which is early payoff without
with loan forgiveness.
With loan forgiveness. And if you're not getting that, you're getting screwed. Okay.
Yeah.
So just
we haven't
call
talked
up
about
and
this
let
in
us.
a while.
We haven't talked. And the reason why I am pushing it a little bit harder now is because of these higher interest rates and everything. Anything to help reduce debt, to get a better interest rate, anything you can do for that, is really important. That's why we're talking about that student loan. The student loan thing is a big deal now for borrowers trying to get a house. So if you got student loan debt and you're thinking about buying a house, you got to give us a call so that we could figure out how to structure your student loan debt, if possible, in the best light to get you the best mortgage possible and save you money on the mortgage. Now, speaking of that, Mike, let's talk.
Go to FloridaTalkRealEstate.com if you know somebody that could benefit from some information about that, or you yourself. You're like, yeah, I should look into that. It is free information, and literally, in our experience, we used to say 10 minutes, 10 questions. I don't want to pin us on that, but pretty close. And, the law office is going to be able to give you to the penny what your payment is going to be for your student loan moving forward. So, again, free to find out, can very much change your life, especially if you're looking to buy a home. That can change your positioning pretty dramatically. FloridaTalkRealEstate.com. Get that information. Thank
you, Johnny. Another way to save money when you're trying to get a mortgage, I'm just going to gloss over a couple things. Of course, raising your credit score, right? Applying for a shorter term loan, like doing a 15-year loan instead of a 30-year loan. These are things, right? But
we're talking about saving money over the life of the loan.
I'm sorry.
So the topic is how to save money over the life.
No, actually, it's interesting in this art. I don't want to get off track, Mike, on that. Okay, I'm just giving you the tips that the article was saying. So the 5 tips they were giving you compare rates with 3 to 5 lenders, weigh the pros and cons of buying points, which is what I want to talk about, raise your credit score, apply for a shorter term loan, right? Because they're saying your rates will be better on a 15-year loan, okay?
Sure.
And you're going to pay more, but your rates are going to be better. And then seek out first-time home buyer programs, which we're going to talk about next week, okay? And the other tip is ARMS, and I'm going to talk about that specifically too. ARMS is an adjustable rate mortgage. I'm wondering if those are going to start coming back a little bit, and we're going to talk a little bit more about that in the future weeks. But right now, let's just talk about discount points, because I think people find it to be kind of mysterious what a discount point is and how it works.
Yes.
So let me give you just like a normal example. Okay. Just let's keep it simple. Let's not talk about conventional financing. Okay. Let's talk about like a regular FHA buyer, right? Okay. So with FHA, you have your mortgage rate plus what's called PMI. PMI, the reason why I'm bringing it up this way is because it shows everything. And then with conventional, some of it goes away. So with PMI is private mortgage insurance. And that is insurance that the borrower pays to protect the lender in case you stop making your payments. It's not a benefit for you. It's a benefit to the lender because there's more risk because you have a lower down payment with FHA or you're not putting 20% down. So in today's, like if today somebody closed yesterday, Mike, with FHA financing.
Yep.
And let's just assume, I know that they got their rate probably a month or 45 days earlier, but what do you think the rate would be? And then what would the PMI be? Like a current rate right now for FHA with the average credit, just an average person, nothing stellar, no glossy promises, just a regular.
I would just, let me just make the math very easy, right? Let's say that your 30-year fixed rate is 5.5.
Mm-hmm.
Okay. Your mortgage insurance, so it's not PMI with the FHA because that's not private mortgage insurance. FHA is the mortgage insurance, so it's just MI, Jim, instead of
okay.
PMI.
That's
right?
I never knew that.
Yeah.
Okay.
So FHA's, if you're doing 3.5% down, FHA's mortgage insurance rate is 0.85%,
Mm-hmm.
right? And that's annualized. So the best way to think about that is to add your 30-year rate plus the 0.85, and that's essentially the rate that you're paying for the 30-year life of the loan. So in this case, 5.5 plus 0.85, so you're at 6.35. That's your interest rate that you're paying.
And then when people walk around and say they got this interest rate, right? If people say, "Oh, I just refied my house," or I'm just making up stuff, okay? And they go, "Oh, I got 4.2 or I got 5.7 or whatever."
Yep.
Usually they're not talking about if MI or PMI was involved, they're usually not saying that, right? Most
I
people
would say never. Yeah, nobody ever.
Yeah.
Nobody adds those two numbers like I do. I only do it for illustrative purposes, and also like if you're comparing, like should I refinance, you should be taking into account that MI factor. And if your first loan was FHA, like it's for the life of the loan, right? It never
Mm-hmm.
goes away.
Mm-hmm.
Typically, right? If you started with 10% down instead of 3.5, then it will cancel. But and it's helpful on the conventional side too. But that one you need to take into account. Well, when is that MI going away? But yeah, you're right. Nobody adds those two for like, hey, I just refied and I'm at 5.375. What? Why is this so high? He's like, well, I'm taking into account my MI factor, right?
Yeah, nobody does that. So that's the first thing you know. So there is a little hidden cost there that people don't talk about, even though it's disclosed to you if you have somebody like Mike, and it should be disclosed to you anyway. But if you're not putting 20% down, the interest rate you're paying is higher. Okay. And so let's say I was doing most people doing FHA aren't doing discount points, right, Mike? Because you're usually on a tight budget, or sometimes they do them.
I would say yes, usually on a tight budget. And so you're taking, under most circumstances, what I would call the par rate. The par rate doesn't cost any discount points. And also there's the discount points. There's also the opposite of discount points, which would be kind of like overage points or whatever. You take a higher rate that would then pay you or give you a credit. And we know, we know there are ways of presenting that. Someone is like, hey, we're going to cover your closing costs, right? Well, guess what?
Mm-hmm.
You're getting a higher rate than you should because there's fat built in there, and that money can then be redirected to cover your costs. But yeah, I would say there's the par rate, the rate that doesn't cost you any points. That doesn't mean you don't have closing costs, right? It just means there's no fee specific to the interest rate, right? You're still going to have lender charges. You're still going to have title company. You're still going to have, the county fees, but there's no specific dollar amount that's related to the interest rate. That's your par rate. Discount points allows you to direct money to buy down the rate, right? And so just as there's not an exact science because it is market based, but let's say you pay 1% of your loan amount. So if you're doing $100,000 loan, that's $1,000, and that might buy the rate down a quarter of a point. So maybe instead of 5.5, you're at 5.25, right? Just as an example, it's never exact like that, but that's the idea. You pay money as a percentage of your loan amount, and it buys down the rate a certain percentage.
So I have a question about that. So one of the things where we used to be able to say, but the interest rates have changed. So I want to talk to you about this before. Back in the good old days, when interest rates were hovering between 3% and 3.5% for years and years, right?
Yeah.
During that time, we used to say that every $5,000, I think, was $25 in your mortgage payment. Right.
Yep.
That's what we used to say. What do you think it is now? Like every
it's about 30.
It's about 30. So instead of paying 25 more, you're paying 30 more. Okay.
Yeah. So for every 5,000 additional that you borrow, or say 5,000 more that you don't borrow, it's going to move your payment about $30 a month.
So if you pay an extra $1,000 in that example to get a quarter point off, are you saving like $30 a month on your mortgage payment?
So that's a different calculation, which I don't have memorized. So I don't know. But I don't know. The way to think about that is you simply just do the analysis at the time. So you say, okay, here's my principal and interest payment at 5.5. Here's my principal and interest payment at 5.25. Right. So there's a difference in the payment there. And then it cost me $1,000 to do that. How long am I in the red on that? Right. Meaning I'm still earning back my $1,000. And then so let's say that's 22 months, right? So you basically, I say, give me $1,000 and I will pay you back this $1,000 in, $12 increments over the next 22 months, right? But then after that, I'm going to keep paying you $12 a month, right? So once you pass that 22-month break even, you are now in the black. And of course, the longer you have the loan, the more money I'm going to be paying you back over time, right? So you've recouped your $1,000 and you're saving continuing forward. So you should be thinking about what's that break even number. Like a 2-year, 3-year break even, I like that all day long. A 6-year break even, I start thinking, am I going to be here 6 years? Right? A lot can happen in life in 6 years time, right? Maybe I'll refi, right? Especially at these rates, there might be an opportunity to refi down the line. Maybe I'll sell the home, right? So the longer the break even, like from a strict financial perspective, it always makes sense to pay points if you're going to stay in the loan long term. But life happens, right?
Yeah.
Most people, what's the average loan, Jim? I mean, we've seen that from 5 years, probably, and it's probably closer to 10 years now.
Yeah, we used to be a country that moved every 5 to 7 years. Now and then during the height of the crisis, we were a country that was moving about every 11 years, Mike. So you're right about that.
And
now I think it's a little bit tiny lower, but still much higher than 5 to 7.
And I would say in our grandparents' time, it was probably 30 years, right? Like they're there. They're buying, buying and staying.
Back then they used to say, like even before the 50s, I think the average person never left more than like 100 miles from where they lived.
Yeah.
Right? Like they never, that was their life, like 100-mile circle from where they lived. And that was like everything. And they never went farther than that.
Yeah. So I think so if the theme of this is like how to save money, there's 2 questions there. Like how can you save money in closing costs? Like how can you retain the most amount of money in your bank account when this thing is said and done versus how can I save money over the life of the loan? And those are on opposite ends of the scale, right? So you don't want to pay discount points if your goal is to retain money for moving or for improvements or, just all of that stuff, or just simply not to deplete your nest egg too much. Right. So you don't pay points, right? That matter of fact, you might take the opposite, take the higher interest rate and save some money. I would never recommend that, but some people are in that spot where they have to do that. If you're looking at getting the lowest interest rate possible, one way of doing that, of course, is to pay discount points. Another way is, like you said, Jim, improve your credit or simply as you're leading up to this thing, work on ways of getting your credit as high as possible, because that will, under most circumstances, affect the interest rate that you're paying. Putting more down is going to affect the interest rate depending on certain things. So,
well, even where we're at now with 20% down. So if you're like the optimal customer, like your interest, your credit rating is beautiful, you got 20% down, you're still picking up. It's like you're gonna have a 5 in your first number, aren't you, Mike?
yeah, like takes Jim's reference point that he uses, and we say this isn't the same rate that you're going to get, but this is a good reference because it shows us week over week what's happening in the market. Freddie's report it came out on Thursday basically said the average rate on a 30-year loan was 3.165%. I'm sorry, Jesus.
5.23.
5.23%. But guess that.
Sold. 3.65 sold. I'm taking it right now.
That's with an average, and they could as 0.9 in fees and points, right? So basically, if you want to be at that 5.25 mark, right, you're paying a point to do that. So on a $300,000 loan, that's a $3,000, fee at discount points to get down to that 5.25. So it's a little bit misleading, because if you're doing the par rate and you don't have money to spend on discount points, your rate is going to be higher than what Freddie is saying there. And depending on your credit and your loan to value, that's going to determine where you land in that spectrum too. But to answer your question, yes, Johnny, if you have a 4 in front of your interest rate, you either paid a lot of money to get there, or you're putting a big maybe 40% down, 50% down, something in that range, and you have excellent credit. So if you have a 4, you've done well, or you paid out the nose for it through the nose. But yeah, you're gonna have a 5, and maybe even a 6.
Let's go ahead and take a break right now. On the flip side, I'm going to bring up something. You guys just gave me inspiration. I'm going to do a lot of research on this next week. But we're going to talk about a sneaky way that we mentioned years and years ago when they changed FHA financing, of how to use the FHA financing to your benefit if the interest rates went up. So we're going to have a little talk about that. Everybody's got a quizzical look on their face if you're watching the video right now. So I don't know if this is going to work or not, but we're going to try it live on air, and I'm going to throw out the idea. Okay? So we're going to talk about it on the flip side.
I love it. And of course, spontaneity involves you as well. If you'd like to be a part of the program, you can dial up at 877-927-6969. Jimothy will line you up. And when you make those calls, we'll take those calls. Of course, maybe you want to be a little less than spontaneous. Plan your visit to FloridaTalkRealEstate.com. That is your path. Your one-stop real estate shop is FloridaTalkRealEstate.com. You got the hotline, 888-973-7828. It's your access to the entire team of pros. Again, FloridaTalkRealEstate.com. 4 minutes from now, we're back at it. Another hour for you remaining. Every Saturday, we bring you 2 hours of infotainment. And hour number 2 is 4 minutes from now. Thanks for being with us every Saturday right here on Real Radio.
Tell your smart device to play Real Radio 92.1 on iHeartRadio. Go on. Tell it. Show that damn thing who's boss.
Hey, it's your boy Johnny C here, host of Florida modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is WZZR FM, West Palm Beach, Real Radio 92.1, powered by the law offices of Anajar and Levine Accident Attorneys. Been in an accident? Call 1-800-747-FREE. That's 1-800-747-3733. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
It is toll free 877-927-6969. If you do have a question, a comment, a concern, you want to be a part of the show, do not hesitate. Dial that up. We got plenty of time for you remaining on a Saturday. In fact, another hour of your questions. You have an open line. In fact, Jimothy's waiting on you. You make that call, we'll take that call. If you're not comfortable on air, I totally understand. Remember, Florida Talk Real Estate is a .com. It's your one-stop real estate shop. Know it, use it, love it, share it. You can change somebody's life by putting them on a Pros Pro, one of the very valuable members of the team. It's FloridaTalkRealEstate.com. Johnny C., that's me. Good morning to Mike Rauch, the mortgage guy from the mortgage firm. How are you, Mike?
I'm doing great. Am I on? Yep. Hi. Hey. Good morning.
Good morning. Wave to everybody on Facebook, Mike.
Hey, everybody. Hi, Facebook and YouTubers. Are we on anything else, Jim? Are we on Instacart?
Not yet. Not yet.
Is there any other long form radio? Oh, we got the podcast. I suppose you can't wave to them. But any other long
iHeartRadio podcast. That's true. There's people listening live to us right now from God knows where.
Oh yeah, with the free download, that iHeartRadio app, absolutely.
Yep,
Thank you for tuning in wherever you might be. And if it's like dark 30, middle of the morning or something, man, bless you. Thank you for finding a way to weave us into your life.
Yeah, it's so true.
Let me give a proper introduction.
Yes,
this is the melodious tones of Jimmy D. It's Jim DePola. He runs a top producing Keller Williams team. That's the Florida Home Pros team. Jimmy D, hello.
Thank you, Johnny. Thank you, Johnny. Happy South Florida, everybody. We got a dry day today, which is really nice. Last week, I did not get flooded out. I thought I'd be flooded out, but you know what? It was a rainstorm. I remember coming back to the place I live, and there was a guy standing outside, and it was wet, but it had just stopped. And I got back at 4 o'clock, 5 o'clock afternoon, and the guy's looking outside. He goes, "So we made it." And I'm like, it was a freaking rainstorm. What are you guys complaining about? So anyway, I'm glad that nobody had too much damage from all that stuff. I don't think too bad. we're going to talk a little bit about an idea that popped in my head. So we're going to try to wing that. But there was something else I wanted to mention first. Oh, please, please keep an ear out. We are going to have a person, anybody that's in our database. Johnny, you know about this. We have thousands of people in our database, from over the years. We've been doing this 10 years now. So we're going to have, we've talked about them on air a couple of times. Everybody knows that I'm part of Player Performance First, which is a sports and entertainment agency run by Jarrett Perry from the Perry CPA Group, which is coming out with a new name. Johnny, you're going to love this. He has a new name coming out for the CPA firm. Okay. It's Perry and Merritt CPA.
Okay.
Yeah. So Mike is now going to be coming on as a full partner, I guess. So Jared's name is changing once again. The only person that's changed his names more times than me is Jared. And so anyway, Player Performance First is doing really well, and they've got a lot of things cooking. And we have a one of my favorite athletes in that group is Sam Cunliffe. And Sam is a basketball player, and he was in the G League last year. And he didn't make it up. He didn't make it up to the full NBA. So what he decided to do right now is he went out to play in another country for a little while, and he broke his clavicle. So now he's in surgery. He just got out of surgery, and he's home, and he's bored, and he has an interest in real estate. So what we're going to have is we're going to have Sam call up our database and, on my behalf, and asking you guys, do you need any help with real estate? It's such a tricky market out there right now. Let me tell you, we say this at the top of the show, but it's so true. The prices so far have been rising, in real estate. They've been rising at record levels never seen before, even faster than during that crazy peak we had from 03 to 06. Then we have the rising interest rates. Then Florida specifically has a huge property insurance dilemma that isn't going to get better anytime soon. This is going to be kicking around for a couple of years probably, right? And now, because now the crazy price increases that we've seen that are not justifiable in a lot of ways is now going to be taxed by your local tax assessor. So you're going to be paying more in taxes from these spikes. So you're being squeezed on all those different levels. And then you have inflationary pressures and all of that stuff going on. There's so much. It's so easy to be confused about what you should do. Should I stay in my house and just hold tight and bunker down and fix it up? Should I refi now or not refi now? I got such a low interest rate, but I got a ton of equity in my house. I don't want to give up that low interest rate. What should I do? I really don't want to stay in my house, but these interest rates are so high. What would I do if I sold my house to buy the new one? What are the repercussions, pros and cons on that? We have all those answers for you. It's a one-stop real estate shop, Florida Talk Real Estate. That's why we've been here for 10 years. That's why we have thousands of people in our database. So when Sam gives you a call, if you have any kind of real estate needs, make sure you pick up the phone and take it. So he'll be calling you starting next week until he gets better and he heals. He'll be helping us out. So please get ready for that phone call. Okay. And we're also going to be texting you. If you don't pick up, and you're in our database, we're going to send you a text. The text is going to be a video. So when you see that, don't think it's fake. It's real, and it's coming from us. Okay.
Awesome.
Oh, okay. Sorry about that. We want to move over to my harebrained idea. I talked about this many, many years ago. So now I'm wondering if it's true or not. Okay. Now I'm wondering if we could actually put it into action. Okay. I don't remember what year it was, Mike, but there was a time where FHA had different terms. FHA financing had different terms than current today. So one of the things back in the day with FHA was that once you hit 20% equity in your house, with FHA, you were putting 3.5% down. And I think back then you were putting 3% down. And I think they raised it to 3.5%. But I think you were putting 3% down. And then after you got 20% equity in your house, it would automatically, or you could request to take away the mortgage insurance right? Because you had the equity. But then I don't remember why they made everything more restrictive. But when they did, they brought the minimum down payment from 3% to 3.5%. And then they made the PMI stick with the life of the loan. So even if you owed $100,000 on the house, but you had a $400,000 mortgage, they weren't going to drop the PMI. Okay, even though you had 75% equity, right? So what they did as a benefit to that is they said that the mortgage is assumable, which means you could leave the mortgage with the house to the new buyer and then move on. So the benefit to that was, I was saying back in the day when they made those changes, was, hey, if you have a smart real estate agent who's super savvy, what they could do is you might be able to get a little bit more money than everybody else in your neighborhood's getting by offering your super low interest rate assumable loan to the new buyer, who then would get a second, if needed, a second mortgage instrument to make up the difference on the purchase. So, Mike, I'm going to set some numbers here, and then you're going to tell me if I'm full of bunk or ways to structure this.
Let me preface this by so generally know the idea you're talking about. I haven't looked at the guidelines for what allows the loan to be assumable. Like there's definitely qualifications required on the buyer side.
Yes.
But let's just say in general, yes, an FHA loan is assumable, which means it can be past the existing loan. It's almost like, hey, let me take over your car payment, right? Like that type of thing, right? You're taking over a loan. It's got, 23 years left on it. It's at this interest rate. You're just basically going to continue paying that mortgage. But there are qualifications, there are caveats, but let's just assume that that's the idea. So go ahead.
Okay, so so let's just assume in this, and we're going to go back to this because I think this is going to be very fascinating. Could be a way for people to get a little edge over everybody else, and I'm always looking for that little edge, and it's not going to work for everybody. Okay,
and we should be careful here because when we're talking about assumability, we're also making assumptions about the assumability. So we should be careful with those terms. Like, are we assuming or is it being assumed? And is it going to be assumptionable?
Yes, we're making. This is kind of like the known unknowns and the
unknown. Assumed assumptions.
The assumability of the assumption. And
making some assumptions about the assumptionability of the assumable.
So I like this kind of stuff better than a lot of the other stuff we talk about because we're winging it, right? We're winging it, but we're being super creative here. We're going to figure out, and then next week we might find out it's all a bunch of bunk. So just don't run out and take this information and go do it. You got to call us so we can calculate everything and make sure everything's cool.
But here's who should be listening, Jim. If you currently own a home, you're considering selling, and you have an existing FHA mortgage. All right.
You have an existing FHA mortgage that had the new terms, and I'm saying new because it's very old now, because these terms have been around quite a while. But 3.5%.
If you have an FHA mortgage and you're thinking about selling, all right.
Yeah, and it's super low, right? And the interest rates. Imagine some of those people when there was 2.65. Oh my gosh, I'm getting excited.
That was just last year, right?
Yeah, I said way back ago, last January, a year ago, January. So okay, so let's just say somebody back in the day, let's see, I'm trying to make even numbers. Okay, let's just make it $100,000 house just to make even numbers, okay? Person buys a house for $100,000 with FHA financing at 3%, okay? Mike, you're not giving me any facial expressions, so I want to make sure
I'm with you. You said something that I comprehended. So I got it. 100,000, 3%.
100,000, 3%. They did it like 3 years ago. Okay.
Okay. All right.
So now they only owe because they put 3.5% down on the 100,000, right? So they had. I'm making this too complicated for you, Mike.
Hold on. Let me bring up my amortization schedule. Hold on.
So the $100,000, 3.5% is $7,000. So they had a $93,000 mortgage, right, on a $100,000 purchase, and now they've owned it for a couple of years. So let's just say they have like $95,000. It's probably about $95,000 they owe. So they owe $95,000 on this house, but now because they bought it so long ago, right, That house is now worth 300. Let's see, we said 95 and 100. Now the house is worth 200,000. Let's just say it doubled in price. Okay. So they're trying to sell the house for 200,000 right now. And let's say that the house will appraise for 200,000. Okay, let's make that assumption that on the market today, if they went for lending, the house would appraise at 200,000. Okay. So everybody else in the neighborhood is selling their house for $200,000, right? And my house is worth 200, just like all the other ones. But I want more than 200,000 for my house. So what I'm going to do is I'm going to offer it at, I'm making up now because we'd have to calculate this. I'm going to offer my house. Now you got to remember it's worth 200,000. So I'm going to offer my house at 215 or 220. Let's say 220. I'm going to offer my house at 220. But I'm going to say, hey, you could take over my $95,000 loan at 3%. And then you're going to pay me the difference, right? And then they would go, either they would give you the money in the difference. So what's 95 minus 215? That's what, 110? 110, right? Is that correct? 120?
120.
So they could go get a mortgage for 120, a second mortgage for 120, right? Or they can get a second mortgage for the difference for the appraisal and pull money out of their pocket. Let's say they pull $20,000 out of their pocket to make up that difference, but now half their mortgage is at 3% and the other half of the mortgage is at 6% because that's today's rates. So they're saving 3% on half the mortgage. If they take my assumability. Now, I don't know if those numbers are true that you could get 10% more, but I bet you can get 3% more if you offer that assumability and it works. I'm thinking. That's what I'm thinking. My wheels are turning.
How about this? Let's simplify things. And forget about from the buyer's perspective, right? Are you willing to say slightly overpay for a home in order to assume whatever the balance is on that mortgage at a lower than current market rate value? So let's say somebody has the ability to buy that home cash, Jim, right? Like they could buy it at 220,000. Should they? And a lot of people say, I don't want to put my cash into the equity of the home, right? The zero interest earning equity position of my home. I want to finance it, right? So they're going to finance at least some portion of that money. Should they finance it at an existing FHA loan of 3%, or should they finance it at current market rates of 5.5%? Well, guess what? 3% seems like Jim, which is better to borrow money at, 5.5 or 3%? Like which one would you choose? Which one would you choose?
If I'm the lender.
Yeah. And even if it has mortgage insurance, right? Even if that mortgage insurance is assumable as well. So take that 3%, put 0.85 on it. So you're essentially paying 3.85 instead of 5.5, right? And you're also assuming the loan. So it's only got, in this case, 27 years left to pay on it, or 26 years left to pay versus the 30. So without overcomplicating it, if you have the ability to just assume the mortgage, now you might also have to finance a second loan, right? That's going to, help you make up the gap. Maybe you don't have the cash, but you have, the X amount of your loan at 3.85. You have a smaller portion at 5.5. And so, it makes sense.
The reason why I'm bringing this up, people that are listening right now are spitballing and trying to figure all this out. And I'm going to have a system for this. I know it. I see it coming that there's going to be a system here saying, if you're in this situation, call us up because we're going to have a system for it. But, and we'll figure out the calculations and figure out if it's good for you or not. So why am I bringing this up? This is a great opportunity for people that are living in a house with FHA financing and they really want to make the move to the new home, but they don't see how they're really going to get there necessarily based on all the interest rates. You could actually look for houses that have FHA financing and offer structure where you assume their loan. You could actually do that where you can find, like if you find a house, you go back and check the mortgage instrument and then see if it's FHA. And then when you turn in the offer, you could structure it differently.
True, but the tough part for so many people that are thinking like, oh, I would sell because the market's so great, but I gotta buy. So if you're an FHA homeowner right now, your motivation to sell and give up your super low interest rate, knowing what you're flipping into, that's tough.
Well, no, but this isn't for everybody, Johnny. That's the first thing, and I understand where you're coming from. This is for people. I kind of said it, but didn't emphasize this. These are for people who really want to move but feel like they can't. Right? This gives them extra opportunity to make a little extra money on the back end, right? To help them for the front end, right?
Yeah, I think that's right. So they're basically already selling, Johnny.
Everybody.
They've got it listed. This is just is there some advantage to their current existing FHA loan, and can they leverage that advantage to more profit on the sale?
And if the market starts slowing down, which we're seeing with more back on markets, more price reductions, we're starting to see a little tiny creep, the smallest creep of increase in inventory right now for days on market, for time on market. So if it starts getting to be a tougher market, this is another thing that separates your house from the other houses, right? To make your house more sellable than other houses, right? More desirable, more value. So these are the things you got to be thinking about. And look, we're heading in that direction where things aren't just going to be put on the market and they're going to be snapped up. That's slowing down a lot.
Now that the other part of, like, if you're a seller, if you're a buyer and you're thinking, holy cow, I can assume someone's FHA loan, that this doesn't mean you're buying that property at the 90,000 mark, right, Jim? You're still buying it at 220. You're just, is there a creative way to get financing at less than current market values if you're going to be getting a loan, right? So the advantage is you get a low interest rate relative to the current interest rate.
They said that the average person is paying, like, I forget the price he is. I think it was in the 3s or something, but they said the average person buying something in the 3s between interest rates in January and interest rates today is about $600 a month, right? For your principal and interest.
I'll tell you, the
people
who bought with an FHA loan, Jim, in the last 3 years, or even last, maybe it's the last 8 years, probably have a lower interest rate than current market rates.
Yes.
Right? Depending on when you bought, maybe like if you were 2018 at the end
that
of 2018,
little gap in
there was a blip
2018.
there.
Yeah, except for that.
Well,
no, even then it was 494. Even then it was 494.
Yeah, even with MI, they're probably still lower.
Yeah, exactly. Yeah. And it's not like it's not that huge gap that you're talking about. But home values, of course, have gone up in the meantime. So I don't know. You might be onto something there, Jim.
Yeah. So here's the thing: it's like I'm just trying to figure out if it's costing you $600 a month more for the mortgage today than it did a year ago or January 6 months ago. How can you save some of that 600? How can you make some of that 600 back? So this is just a creative way to help that. And I'm telling you, the average realtor is not talking to the seller. And from now on, and I'm training my team to do this, is like when you're turning in the offer, ask the people what kind of mortgage they have, right? Ask the sellers, right? If you're the buyer's agent, hey, what kind of mortgage you have? Oh, you got FHA? Would you consider assumable? Because, we talked to our guy, Mike Rauch from the mortgage firm, and we already figured out our buyers would be qualified for an assumable FHA. And we'd like to structure our offer that way. We might even be able to give you a little more money to make it a win-win. What do you think about that? Right?
Yeah, beautiful. You got to be working with people that think not only very well in the box, but in times like this, look, the real estate market is always moving. It's never, even when you feel like it's stagnant, moving sideways is still moving. You got to evolve with the day-to-day changes. And having people that think of creative ways to have your offer stand out, put you in a better position. It is tough still out there for many buyers. But we're closing with folks. FloridaTalkRealEstate.com. It's your one-stop real estate shop. You find your access to the entire team of pros. Real easy. FloridaTalkRealEstate.com. Jim, do you want to do a reset or do you want to plow through? Because I have a question in regards to like inventory and kind of.
I would love to talk about that, but let's go ahead and do the reset, and that'll be the question. So what are you going to ask on the flip side about inventory?
So, we're talking about creative ways to possibly buy a home and like indicators. I was reading some articles in the last week or so about new construction and how things are kind of changing on the day to day for them, whether or
Yes.
not it's an indication of what our market's going to be going through.
Yes. I guess I think I read similar articles. So yeah, we're going to talk about that next on the flip side.
There it is. Florida Talk Real Estate back 4 minutes from now. Thanks for being with us here on Real Radio.
Got something to say?
I got something to say.
Text us at 47142. Start your message with Real Radio. Standard data and message rates apply, and don't text while driving.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
Hi there, I'm CBS 12 meteorologist Jennifer Collins. After a sunny start to the day, cloud cover will increase through the lunchtime hour with high temperatures returning to the middle 80s, feeling like the high 90s. Showers and thunderstorms will return later this afternoon and evening. Rainfall, the biggest threat in today's storms with localized flooding, lightning, and gusty winds possible.
This report is sponsored by Dairy Queen.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's it. Toll free. You still got about a half an hour remaining, 2 hours of infotainment every Saturday, and it zooms by on our end. I'm sure it does on yours as well. But if you've been thinking, man, I got to slip in with my question, my comment, my concerns, you still got time on this Saturday, 877-927-6969. Of course, as always, you can always reach out to the entire team off air at FloridaTalkRealEstate.com. It's your one-stop real estate shop, FloridaTalkRealEstate.com. Johnny C., that's me. Hello, Mike Rauch, mortgage guy from the mortgage firm. How are you, my friend?
Doing good. Last half hour, we got to jam it in here. Lots of good info today.
Jam it in. I agree. Absolutely. Always a ton of information to be had. And we throw some entertainment in there. We call it infotainment. Hopefully we give you a little bit of entertainment along with that very valuable information every Saturday. Jim DePola, big part of the information and the entertainment. That's Jimmy D, as I like to call him. He runs the top producing Keller Williams team. It's the Florida Home Bros team. Jimmy D, how you be?
Good. It was kind of funny. I was in the I was calling one of the other colleagues in my office over here, my new office, and when I called him, he didn't recognize the number because I had never called him before. But I said, "Hey, it's Jim DePola, from the office," and he's like, "Jimmy D." And I started laughing. I was like, because I don't know the guy that well. I guess he listens to the show because he went, "Jimmy D."
Love it. That means he definitely has been listening for some time. So thank you very much for that. Everybody that tunes in every Saturday. So let me slide into my question.
Yes.
And see if this is indicative. So we've been talking with Mike, about refi numbers. They're down like seemingly week after week. We're seeing the refi potential for a lot of folks is really kind of slipping away. It doesn't mean it doesn't happen. A lot of the refis that are happening right now, I'm sure Mike will tell you, cash out refis, probably the driving force. And I understand people trying to tap at that equity and willing to pay a little higher interest rate to get at it, pay off debt. Maybe they're like, screw it, I deserve it. I'm going on a family vacation, whatever they opt to use the money for. A lot of people are positioned with equity. It's going to cost them a little more, but sure, that's essentially the refi game right now. Nobody's refiing for better interest rates, and if you are, were you getting hosed? We've been talking about rent and how that's just gone nothing but up, and inventory's been really slim for so long. Values of homes going up. A lot of buyers in the market. Is this shift right now the big key for our housing market? And I'm talking about new construction. So I saw permits were down like almost 4% for, I think it was April. So the permits are down. Buildings aren't quite the lots aren't being sucked up. The new home construction isn't at the pace that it was. Lumber's coming down, but I guess availability is still kind of iffy. Does the home construction market, the new construction market, is that going to be our, I guess, canary in the coal mine, as we might say, for where this market is heading? Because to me, that's our saving grace. And if that's slowing down and we're already seeing, I guess, some price reductions for new construction now, we're not seeing quite and I guess it matters where you're at, right? You say street to street, not only neighborhood to neighborhood, but street to street. Demand is going to vary wherever you're at for sure. But like within the last few months ago, we were hearing about people paying thousands of dollars to get into a lottery for a chance to buy new construction. Feels like that's cooling way off. Is this the light that we're going to follow? The indicator for where our future is for the housing market?
Well, nobody knows what's going to happen in the future, Johnny. But this is a major, major indicator, and I kind of mentioned it just a couple of weeks ago about I'm being very down on the builders. I got to be honest with you, the developers, because during the time when we had the super low interest rates, instead of turning on, putting the gas to the gas pedal and building, they didn't do that. They were very picky about what they wanted to build. They only did luxury because they felt I'd build less homes but make a bigger profit off the luxury than doing the volume of the more affordable homes. And it was working for them, but it wasn't really working for the demands for the market. It was like not meeting the demands because there were so many people that wanted to buy, quote, affordable homes, not luxury homes. and they didn't have the opportunity to buy new construction really. And so that they were left with the resale homes. So that has been a big problem. And I've been noticing that their sentiment has been going down since January. The sentiment of the developers, the builders, has been going down since January. So the interest rates are going up. Now that's a normal function of the market to a certain extent, but going up over 2 points in 5 months or 6 months, well, 5.5 months, 2 points. That is a real concern that they have to be concerned about. Those lumber prices have been dropping for quite a while right now. So that's an issue. But the other thing is, let me read you a headline because I was going to talk about this today. This is coming from Fortune magazine. The housing market is entertaining. The housing market is entering, quote, the most significant contraction in activity since 2006, says a Freddie Mac economist. So Freddie Mac and Moody's Analytics are saying right now where we are right now with mortgages is exactly where we were in 2006. So welcome to 2006. Who won the Super Bowl in 2006, Johnny?
I'm going to guess the Patriots.
Okay. Yeah, just that. Yeah, that's so funny. I love that. I thought you would have that off the top of your head. So whatever was happening in 2006, get those clothes out, listen to that music, watch a movie from 2006. That's where we are with mortgages. We saw a 20% decrease in mortgage applications. I don't know if that was refi and mortgages, but a 20% purchase applications were 20% lower than the same week a year earlier. That's exactly where we were in 2006. Why are they pointing out 2006? Why are they mentioning that? 2006 was the peak of the market. That was the peak of the real estate market. This is it, guys. If we haven't already been there, we're at the tippy point of the peak right now. I don't see this mountain growing. I see that we're starting. If you were looking at a mountain peak, and I said that we've been in the snow caps for quite a while, the mountain peak, I just couldn't tell if we were on the left side of the mountain or the right side of the mountain peak. Now we're at the peak or the right side of the mountain. I don't think there's any more left side left. Okay. What does that mean? I still think we're in the snow cappy area, meaning we're not sliding down too far. However, this is another thing. Moody's Analytics is saying that they're expecting a year from now. What do they expect a year from now the appreciation rate to be? So how much appreciation do they think the average home is going to get next year?
Are they doomsdayers though? I mean, can you give us that much at least?
Well, I read you the headline.
Okay.
The housing market is entering the most significant contraction in activity since 2006.
They're going to say 3%.
0%.
I was going to say 3% too.
Yeah.
So 0%. Well, that's okay. So that's
no growth next year. Now that isn't the end of the world, guys.
That is not doomsday.
No, it is not doomsday, but it's realistic. These are the things we were talking.
Oh, hold on a second. Let me just sum that up. So the most significant real estate contraction since 2006, your home is going to appreciate not at all.
Yeah,
it's not going to depreciate. It's just not going to appreciate.
Yeah,
not bad.
Right,
not bad.
And that would be a good day in my mind. And I've been telling people, even people that are buying houses right now, I've been saying, look, the last year's appreciation, whatever appreciation we got in the last 12 months, just erase it. Because that's what's going to happen, guys. Okay, most of that's just going to be erased the last year. Because you know what? The last year was all froth. It was all froth, right? There wasn't real value growth in there. Now, people are going to argue with me about that. But traditionally, Florida is a 3 to 4% appreciation state. At the end of last year, we talked about, and especially in January and February, when you were doing year-over-year growth, we were in the high teens, 15, 17, 18%. Okay? You can't get 5 years appreciation in 1 year and expect it all to be real. Some of it's real. Some of it's real growth. But there's a lot of fluff in there. And I'm thinking 10%.
But isn't there, like even in froth, isn't there like a huge difference in how the froth is kind of designed? So if our market was driven the last 4 years by people that were absolutely overextended, buying these, right? Fog and mirror, get a loan, like type scenario that we've been in before, that froth versus the froth that we saw, which is people coming in with cash money and overpaying. That's totally different froth, though, isn't it?
Yes.
But
I think
like a more stable froth, which is why I lean more to like that 3%. But even as like you noted, Mike, if we stay flat as far as homeowners go for growth in our equity, that's considering what we've been through. Like I know what I've seen since I bought my home 8 years ago. Remarkable value growth, right?
I think Johnny. So I that's a great point. Before it was like you were overextended, you got a loan, you got into these weird, interest only payments for 10 years, arms, all of that stuff, and so there
I
was
hate hearing those
definitely
might come back. If those come back, that froth is ugly.
yeah, so there's an element of if you go back to people who basically stopped paying their mortgage back then, there was people who couldn't pay their mortgage for whatever reason, like maybe their income adjusted or their payment adjusted to a point where they just simply couldn't afford it. We're going to see some of that. Maybe it's based on increases in insurance rates, right? Or things like that.
Yep.
There's also the element of people who stop paying their mortgage because their home depreciated in value so much. Right. And so I'm curious if there's significant depreciation, what percentage of people are going to be in that boat where they're like, this thing's not worth what I paid for it. I'm going to stop paying my mortgage. I think that's going to be a small percent.
I don't think that's going to happen.
Yeah, but there was an element of that, Jim. There certainly was an element of that. People who were just so upside down.
You mean
that
in 2006?
Yeah.
In 2006,
that other frothy market we found ourselves in.
Yeah. I totally agree with you on that. There were a lot of people. Well, you know what? There weren't as many people as we thought because we were in the trenches on that, right?
Yeah.
I mean, Johnny was there too. We were in the trenches. 2012, 2013, 2014, and a little bit of 2015. We were there so much. And the thing is that most of the people calling us up were not I'm sorry,
able to modify, right?
No,
that's a good indicator. People who were trying to modify.
People were desperate.
Yeah.
I didn't get many calls. I just don't want to pay this. I overpaid for the house. I'm just not doing it. I could afford it. Get me out of this house.
Yeah.
There were some people, but it was not the phone calls we're getting. I remember the first year we went on the show and we were offering help to people. We would get calls from irate listeners complaining that we were destroying their neighborhood by helping people out with low mods and short sales. Because the people didn't understand that this wasn't going to go away and we needed to fix the problem. And instead of fighting it, and the homeowners couldn't do anything about it, but instead of fighting it, they should have embraced those programs. Yep. And the reason why, if we had jumped on them faster and were able to do them more efficiently, and I'm not talking about us, I'm talking about the federal government, and do everything more efficiently, we wouldn't have had the big price drops that we had. It would have been bad, but it wouldn't have been as bad as it was.
Oh yeah, like HARP and all the programs really got a bad name from a lot of people, and it was just, I know ignorance always feels like such a bad term. It just means not knowing, right? I mean, and when you have ignorant viewpoints, they kind of get spread around. Those programs were remarkable in keeping people in homes. That was really where we're at. People wanted to stay in their home and afford their monthly pay.
We just listened to this. I just found this out yesterday because I forgot. One of our customers who's selling a home right now and then buying a new home with us, they had come back to us the first or second year we were here and got the $50,000 Willy Wonka golden ticket.
Ooh, the golden ticket.
And they stayed there for 10 years because of that. And now they have a growing family and they're selling their house that they were almost lost. Okay.
Oh,
now they're selling the house. They're selling the house. The $50,000 has been forgiven a long time ago. And now they're buying the new home for the upgrade for their growing family, right? So those people, that means that house did not go into foreclosure. The property taxes were paid all the time. The HOA was paid all the time. The house grew in value. It wasn't a vacant house. It was a house occupied by a family with no vacant zombie home, right? There were all those benefits of that, right? And they did the right thing, and now they're moving on to the new thing. Isn't that an awesome story? You know, it's like 10 years later, now they're doing it. So all those people that were saying back then, oh, everybody's taking advantage of the system, it wasn't like that, right? It wasn't like that for most of the people. Was there fraud?
Yeah.
Were there people just walking away? Absolutely. But you know what? We didn't work with them. Those people, you don't know how many scam artists came to us during those years and wanted to be part of the show.
Jimmy,
and we were thrown so much money to like have them come on the show to offer their plans to save the homeowners. So I'm like, no way. We're sticking with Krasker Law. Thank you very much.
Well, am I misremembering? But is that one of the things? Was the Florida Hardest Hit something, the program that was out there, but you couldn't like talk about it? Like Paul couldn't advertise or something?
That's the student loan program.
Oh, okay. That's the student
loan program. The student loan program, the federal student loan program, from what I understand, in the bill that was passed, does not allow the federal government to advertise the student loan program that we talk about on the show.
Okay. Which is why they're getting undercut by when you call your loan servicer, they're like, oh, here's our program, right?
Because the thing is that they
didn't want
wanted the public, the general public, to advertise it. So they wanted nonprofits and things like that. And people didn't do it. And it's a great program. It's one of the best government programs I've seen. Speaking of government programs, let's just talk about this really quick again. Now, Mike, I'm throwing, oh no, we might not be done with the market yet, Johnny. So the bottom line is the new construction stuff. I definitely agree with you. That's not looking so good right now. I think that's a little more of what's going to happen in the future. Now, let me give you a flip side on that.
I can just on the new construction starts. It's kind of weird. Like you always read these articles about it, and it is comparing like a year over year. But we had a very strange 2-year period, which were anomalies as far like if you'd say new construction starts in May of 2020, like, hey, we got to be up over that number, right? We're like, it's probably got to be like a 100% increase from a 2-year analysis. But that was just a strange year, and of course, new construction starts were down. Everyone was refinancing.
Well, some of it, sometimes the articles, I don't know about the one Johnny read. I don't think the one I read. No, I think the one I read a couple of weeks ago. It did say they talked about year over year, but then they talked pre-pandemic.
Okay.
And then they gave you another backup stat, a third stat, saying in pre-pandemic, this is where we were pre-pandemic.
Yeah.
So they would do that. But you're right. It can be skewed that way very easily, right? So the stats, you can move them around the way you want. But we're talking real life, and I don't have an agenda.
Yeah, me neither. So I'm not cherry picking stats to try to like put my opinion in favor. It's really a matter of like, is this an indicator?
Yeah, that's what
is this something we should be paying attention to?
Yeah, and that's what we're about on this show. Is like telling you what's going on in the news in a fun and entertaining way, and you kind of like, and then we help each individual person try to figure out what's best for them. But the thing is, I agree with you. The developers aren't looking so good, and the numbers are backing it up. It isn't that they just feel bad about stuff. They're not doing as many the new home starts are not happening. The permits are not being pulled as fast. And I'm not sure that what they're building is meeting the needs of what demand is out there. And I think they're cruising for a bruising on that. And I think they're going to see some price reductions coming.
Well, help me out with what, I'm sorry, Mike, real quick. What is affordable housing? What is that number? Because that's the headlines. We need more affordable housing. Is 400,000 affordable?
Well, the average person, they do have might have better. Do you have actual numbers on that? Because I know that the average income for a person in Palm Beach County is about $75,000 a year, roughly. Right? That's the average person.
The what they call the area median income in Palm Beach County is something like 68,000.
Oh, okay. I thought it was like 75, 68. Yeah. Okay. Yeah. So 68,000. So what can a $68,000 buy somebody? Like somebody, assuming they have average bills. I'm just throwing out. Don't go crazy on that, Mike. just rough. Like somebody
breaking my
really
brain.
If you're making 60,
you're saying average bills. Like is this? So I don't know if you're a single 68,000 and you got a car payment, some credit card payments. You're probably qualifying. 2,000 a month, right? That 1,800, 2,000 a month. that probably puts
$300,000
you
home?
somewhere north. So I was going to say somewhere south of 300,000, depending on the circumstances.
Right.
There's no way these new construction is going to be building $250,000 homes.
No, but think about this,
when
Johnny.
you hear affordable housing, you're like, what?
I was going to say, if the house is below the median sales price, except that our median sales price was how much, Jim, in Palm Beach County? What was it the last time you read it? Was it approaching 600,000?
601.
Yeah. So I don't know. Yeah, Johnny, I would say I don't know how to answer what's affordable.
I wouldn't be surprised at that 601 number, that when everything flattens out, I wouldn't be surprised if we were at
501.
I was going to say 505 to 535.
Yeah.
I think that's where we're probably going to end, unless we get a massive unemployment problem or something like that. If we just have high inflation and the inflation gets fixed in the next 12 months, we're probably going to end up at that 600 is probably going to be 505 to 535.
Well, we end up with high unemployment though, and
then all bets are off at that point. Then I have no idea. Then it's going to be, let's just see what happens.
Can we at least say, coming out of this conversation, that because the permits are slowing down, that if you've got a builder who's delaying because the permitting is taking too long, they're full of it. You can call them out.
Yeah, exactly. I know. Hey, here's the other thing. Here's the other thing on that. I was talking to one of my good buddies who used to work for us, Mario Toromino. You know Mario, Johnny, and Mike, and he's been all over the place. He's worked at all these different companies all over the country for real estate now.
He's been everywhere, man.
Yeah, he has been everywhere, man. He's Johnny Cash. I should call him Johnny Cash from now on. So he said what's happening up here locally, like in St. Lucie County, there's a developer that are building these homes, like the ones, the one lot homes, Johnny. You know what I'm talking about, right? So you could go on Bayshore Boulevard and they have all the one home builders, custom builders, and you go there. And the same thing over on Royal Palm Beach Boulevard.
Yep.
Boulevard in Palm Beach County. You go pick your builder, right? Well, one of these builders, what's happening is almost everything that they're building, one of those national rental companies are just buying everything, like every single one of the places. So I have Mario lives in a neighborhood where 3 neighbors have brand new construction homes in his neighborhood, and all 3 of them are owned by a rental company, and all 3 people living there are paying rent. Yeah,
that's tough. Yeah, that's going to be the thing we need to pay attention to. That's going to be the big save for a lot of buyers.
Yep, it's so a lot of this stuff is going to be kind of crazy. A lot of topsy-turviness, a lot of choppy waters ahead, right? I'm not trying to be gloom and doom. I'm not saying that we're having a crash or anything. Everybody's case is different. Some people are going to do really well in this market in some ways. Other people are going to struggle. But what you need is the best advice that you can to figure out what's best for you and your family. And that's what we're here for. We're really here. We care about everybody that calls. And we always try to give you the best information.
That's right. And it's easy to get that information. Remember, we call it the one-stop real estate shop. But we do that for a reason, because at FloridaTalkRealEstate.com, you have access to the entire team, a team of pros. They are experts in their field. And if you have any familiarity at all, man, this team works cohesively together. They pick up the phone. They get answers to questions that are necessary in the process. Every situation is like a snowflake, and they treat them all as such. Every situation is very uniquely different, and they've worked through many, many different experiences for folks buying homes, selling home, stuck with a home, don't know what to do. Refis are still happening. Mike Rauch is the mortgage guy. And if you got a ton of equity you're sitting on and you're thinking maybe I need to look into the numbers, get with Mike. Go over the numbers. See if it's the right move for you and your family moving forward. Again, real easy to do. FloridaTalkRealEstate.com. You're having access to the entire team. We mentioned student loan debt a little bit earlier in the program, as things are starting to kind of the smoke settling, I guess, when it comes to student loan and coming out of the pandemic. You need to position yourself to be able to be saving money when you can. And especially if you're looking to buy a home, your student loan debt can be the deciding factor on whether or not you can even qualify. Don't run into those caveats without at least some knowledge. go ahead and go to floridatalkrealestate.com. The entire team is ready for you. floridatalkrealestate.com. Facebook, YouTube, always remember Florida Talk Real Estate, and you'll find the hotline. Yes, you can call the team at 888-973-7828. You'll find it at floridatalkrealestate.com. Mike Rauch, I hope you have an excellent weekend, my friend.
Thank you, sir. You too. Thanks, everybody.
Thank you, as always, for being with us. And Jim DePola, I hope you have a rest and relaxation-filled weekend.
I'm going to try, Johnny. You too. You too. I hope your family takes advantage of this better weather.
Yeah, definitely have a pool in the future as long as the weather cooperates. And it is right now, so I'm going to be hustling to the backyard here.
Yeah, you got a couple hours until it's going to start raining.
Squeeze it in, right? Squeeze it in where you can. Again, thank you all for being with us on a Saturday. FloridaTalkRealEstate.com is always there for you. Share it. As I say, use it, know it, love it. And you'll definitely get the thank you card in the mail when you turn somebody on to FloridaTalkRealEstate.com. Greek, Joe, and Jimothy's going to stick around. The locker room is next. Thank you for being with us. 92.1, 101.7, wherever you might be worldwide, your iHeartRadio app. Tuning in to us here on Real Radio.